Let's go into Bitcoin and Ethereum today, talk a little about some of the trajectories of where the market might be heading. This could be a little different than you've anticipated, so stay tuned right here. My name is Pompliano. Welcome back into TechPath. Let's get started. I do want to thank our sponsor, and that is Tangem. Listen, self-custody is one of the core, I think, elements you need in crypto. Whether you're brand new to crypto, maybe you've been in crypto for a while, this is one of the steps that you should be taking, and that is to get your tokens and your coins off of centralized exchanges and move them over to your own self-custody solution. Tangem does a great job. It's a really slick card that you guys can use, super detailed in terms of security, and the app is super flexible and easy to use. So anyone out there is going to be able to engage on this. All you have to do is hit that Get Tangem button up there at the top right. That's going to get you into the 3-card set. That's the one I would get. Don't go with the 2-card set. Get the 3-card set and use our code. It's going to give you an additional discount and start your journey, because that's a big part of it. Let's go into a couple of topics here. Bitcoin price clings to around 62K. This, of course, is talking about Bitcoin bulls suffer a little bit of a boredom right now. And this is pretty typical of the market when you look at the range that we've been in over the past couple of weeks. Daily close right now around 62.3, even though we did have a nice little pump on Friday and Monday. Frustration at the lack of overall direction since Bitcoin's block subsidy halving in April. So since the halving, we're seeing, pretty much business as usual kind of thing. After that, it seems likely we'll continue upwards. Boredom has started to kind of set in since that halving took place. And if you look at it in comparison, it's very similar to past scenarios. So we are in that kind of range right now. And this is maybe something that could be setting up, though, I think, for a shift in the summer. And there's a couple of reasons why. One, of course, is we're going to see some CPI data coming in. We have already started to see the job numbers soften. This is a big deal for the Fed. What I mean by that is they cannot get caught flat-footed and not be in a position of correcting in the market. If they miss this window, let's say they don't cut rates soon enough, we could spiral into not disinflation, but actually stagflation, meaning we're losing jobs and inflation might be maintaining. So there's a lot of scenarios that play out right now. I want to go to Tom Lee, because he's talking about inflation and rates on this clip.
I think going forward, a couple of things are better. One is like this job market isn't so red hot anymore. So I think the Fed's not on its heels as much about, inflation could fall. And then I think that the things I mentioned, housing and auto insurance, are going to start to cool. So inflation prints start to look better. And we know that we had a big reset in April. So I think it looks pretty good for now.
You must agree, I guess, that the Fed right now is in restrictive territory, because I've been amazed at how the default position for Jay Powell has been for weeks and months that we need to cut eventually. He never even, it seems like the idea of hiking has never even crossed his mind, and he took it off the table again last week, basically. He seems so sure. He's jonesing to cut rates. He really wants to, and the market believes him. And every time he says it, the market rallies and gets ahead of itself.
Yes. I mean, my sort of guess is I don't think the Fed's that comfortable with long-term rates at these levels. It is quite high, and as you know, it's putting a lot of pressure on regional banking. It's really hurting their balance sheet. The cost of money is quite high, especially relative to the rest of the world.
And you think we are restrictive?
Yeah, I think it's quite restrictive, yeah.
So if you believe that the restrictive scenario is in play, then you have to look at the factors that are kind of pulling in on the macro side of things. And of course, that's going to be inflation. Obviously, the jobs now are starting to show up in terms of they've slowed. So the market is cooling, to his point. Real estate, most likely, and automobiles are probably going to be one of the next big hits. And if that does occur, then it goes back to my point earlier, and that is we might see some fireworks in the summer as early as maybe July or August. So a couple of key points here right now, though, that we've got to be very careful on. Remember, the last time that Powell got very, I'll say, overexcited, that was last fall. And everybody thought we were going to get these 5+ rate cuts throughout the year. It was just going to be a bonanza. And then all of a sudden, inflation was stickier, and Powell immediately retraced his thoughts. And that's the waffling that I'm concerned with the Fed. So there's a couple of points that I think I'm still concerned with on that. However, with that being said, there's still some indicators that are showing some significant moves in these periods when we see these dollar cost averaging opportunities. One, of course, is this $438 billion asset manager. This is Susquehanna. They buy $1.3 billion in Bitcoin ETFs. That's an amazing investment for a intro investment for a fund like Susquehanna. That to me gives us a lot of insight that maybe there's some big boys starting to understand where the market flow is going. Because remember, you want to be there early. If you're there late, then you've left maybe 10, 20, 30% in some cases with risk assets on the table. And that's something they want to get away from. So Susquehanna, one of the largest proprietary trading firms in the world, them going in on Bitcoin, just another big advantage, I think, when you look at SIG overall. Other things I want to go into, this was a nice tweet here by TED Talks Macro. 270 million USD flowed into spot Bitcoin ETFs on Monday. Another 600 million USD on Friday, slower jobs report. Everybody kind of pointed to that, is that jobs slow. That means the Fed is going to look at this as a regressive scenario in the economy. He cannot let this get too hot in terms of job loss. And if inflation does in fact stay sticky, this is a scenario that would not be good for the Fed in general. And that's the concern I'm really worried about, and that is that the Fed loses their opportunity, their window of opportunity of getting a rate cut in. So spot ETFs could open up though here to China and 1.4 billion in terms of their population. And there's a couple of things that could play into this. One of them, of course, is the real estate market inside China, starting to cool a little bit. There's talk that Hong Kong spot Bitcoin ETFs could be added to the tie-ups, equity tie-ups. Implications of this are massive. This would be huge. And the one thing that you have to kind of compare, it's just a matter of time. 70% of China's wealth right now is in real estate. So there are currently 100 million people in empty homes. That means real estate's not moving. So they need an alternative opportunity to reduce social unrest. That is an issue, because that to me, to placate that population, CCP could open up some lines here on ETFs for Bitcoin. I want to go to a clip here by Anthony Pompliano. He was talking a little bit about ETF inflows and the impact. Listen in.
Well, I want to talk about the Bitcoin ETFs and some of the outflows and inflows that we're seeing. Obviously, record-breaking outflows for Grayscale to the tune of almost $17.5 billion. But I know they did just recently have their very first week of inflows, so congrats to them. I wonder what story that tells you. Is that something idiosyncratic to Grayscale, or is that indicative of maybe more institutional money coming into the space?
Yeah, look, I think that they knew by not lowering their fee to be competitive with everybody else that people were going to leave. And the calculation was how many people are going to leave and what is it going to make up for in terms of this fee. Now, what's really interesting is their market cap of the AUM that they have is much higher than maybe everyone expected, because the price of Bitcoin is up 50%. Right? And so all of a sudden you're seeing that fund continue to grow in size, and that's really blunted a lot of the pain of those capital outflows. Now, what I do think is interesting in terms of the inflows is you got to ask yourself, like, who's buying that, right? If there's these other ETFs available, it's unclear. And until we know who that is, you really can't kind of analyze it. But I do think it speaks to this larger story of, like, fees matter to a degree, but actually when you're looking at an asset that goes up hundreds of %, the difference between 50 basis points and 150 basis points, it's material, but really the decision is, did I allocate or did I not? That's going to ultimately drive most of the return that you're going to experience.
So a couple of things to look at with Pompliano's analysis there is there was a nugget in there that he was talking about, and that is they don't really know who the moves are coming from, which I think still are going to be coming from asset managers, much like what we see with Susquehanna and what they've revealed, because that is not something that is just commonly thrown out there, in Wall Street. So I think we'll see more of that starting to open up. And as that occurs, you're going to see that domino effect, people piling onto that. I do think that this could open up a lot more direct access to Bitcoin, even though the ETFs will do just fine. The other asset that we have to kind of watch right now is Ethereum, because Ethereum, of course, is under fire with security allegations. You've got, is ETH this cycle's basket case? mainly based on the performance of ETH. If you compare that to what Bitcoin has done in the last 6 months, a couple of points they do highlight here. One is the linkage. This is not necessarily translated into positive momentum for Ethereum. Some people are looking at this sluggishness mainly because maybe they don't truly understand the tech itself and how deep it is going. The other argument to that is that Solana has made it on the scene this cycle and has made these massive inroads in all of these utility use cases, which have a lot of similarities to ETH. So now you truly have an alternative blockchain out there. So the digital gold narrative is heavily promoted by BlackRock, of course. Most likely we'll see an ETH ETF coming out of them and others. But they themselves have said that Bitcoin right now is still the #1 focus and less on Ethereum. So if we don't have a BlackRock pushing Ethereum, and you have Ethereum fighting off a major challenger in something like a Solana or even an Avalanche, it gets a little bit thwarted, I think, in terms of outlook. So that's the question I'm asking myself. I love ETH, I'm invested in it, but I also look at these other projects and how fast they are moving and the percentage opportunity for the upside. So that's really what you have to kind of ask yourself and your questions on where ETH is going. The other thing is that I felt like if we were going to see a win for Ethereum, it would have happened during that ETH ETF in Hong Kong, and that necessarily was not the case. So 15% of inflows versus Bitcoin's 85. Now, if you look at that and you go over and look at this, and you say, all right, well, Mastercard and US banks now are kind of moving into tokenized assets. This, of course, is good for Ethereum. And some of the things that I think they are continuing to showcase here is assets like commercial bank money, securities operate on these, these disparate systems by tokenizing all this. You've heard this probably on our show, especially because we've highlighted this, even with Fink. Larry Fink talks about this quite a bit. But these distributed ledger technology solutions, especially for settlement processes, could be in one unified platform. Again, this is where ETH could be a big benefit, but so could others. Avalanche we talk about as well. Leading banking associations, including Bank Policy Institute, American Bankers Association, they've all kind of gone this direction, saying, hey, Gensler, can you give us a little bit of a modification so we can kind of get involved in this? And this is all involved into this thing called the SAB 121, which is not necessarily complicated, but it's the issue of banks having to hold a 1-to-1 from a crypto asset to a dollar. So that's a problem because of how asset management is done in banks. And it could be an issue, but that's not for this video because that's a much bigger video we should probably do to give you guys an insight on that. But the banks are frothing is the point. They're wanting to get into this market. And that's the thing that I think where ETH could become very interesting, providing it's not a security. So let's talk a little bit about that. Let's go to this next clip from Pompliano.
Well, let's talk about the SEC because Ethereum, this lawsuit accusing the SEC of considering it as a security, it was called a commodity. The founder now saying it was gaslighting from the SEC. What would you call it?
Yeah, look, America has this amazing kind of court system, right? And so I think that one of the things that the SEC has done a great job of throughout decades is when they think that somebody's doing something wrong, they usually go and they try to either negotiate a settlement or they go to court. And what we have seen time and time again is that the SEC historically has been on the right side of many of those cases. Mm-hmm. What has happened in crypto recently is a couple of people have said, well, wait a second, why don't we use the court system to go say, well, we think you're wrong. And the beautiful thing about America, and not very many places around the world, but in America specifically, is that the SEC is going to send their best lawyers. The other groups are going to send their best lawyers. They're going to argue it out in court, and the judge or a jury is going to decide who's right and who's wrong. And so I think that I don't have a strong opinion as to like who is right or wrong. The facts are, if you read both briefings, they kind of have very different tale of what the facts are. But I do think that we've got to find some sort of solace in the fact that the court will decide this. Now, I always have told people in the crypto industry, like they want quote unquote regulatory clarity. Yeah. Just because you get clarity does not mean you get the answer you want. Right? And so, yes, you want clarity, but actually a lot of times when people say they want regulatory clarity is they're like, but we want it approved in the way that we want. Mm-hmm. And so I think that we will get the clarity. It's just people have got to be really careful here as to like, okay, if you get that clarity and it's not what you want, how are you going to change the way that you do it? And the last thing I would say is just like, if we don't get clarity in the way that I think the crypto industry wants, there is a very real brain drain. There are people who are leaving the United States, and so if we want to be the leader in this kind of innovative field, we're going to have to figure out how to do that, but also have these people operate within a set of rules.
This is going to happen not only in blockchain, but it will happen in AI as well. You guys can just mark this date, pin this video, if we don't get the clarity, because at some point we will see regulatory alignment that will start pushing back on AI. Any kind of technology that starts to advance the opportunity of big business is going to get challenged, and I think that's going to be the case as well. However, you look at one thing, and that is there's no big ETH trade until a little bit closer to U.S. elections. A lot of people are looking at this because if Gensler let's just assume that Trump gets in, and if that does happen, then it's likely that Gensler is going to get the boot. Now, this could increase ETF odds, which would obviously benefit ETH. It also could increase less odds for less pressure on ETH as a security or on digital assets altogether. Now, at the same time, you got to be careful who you ask for, because we might get someone in there even worse than Gensler. Don't know, but we have to be aware of that. And like even Pompliano was talking about, regulation that may not necessarily mean that it's going to be good for you in terms of some of these projects. I want to get into a little bit more about the election. Here's another clip. Take a listen.
I think Trump has done kind of a 180. He historically, was very much like, I like the dollar, I don't like anything else. I think Vivek has kind of been in his ear a little bit about Bitcoin. I think at one point he was even on stage and he was like, basically like, Vivek just said it, I should say this out here. Kind of said, he was open to Bitcoin. It's unclear kind of what Biden's personal views are, but it seems like the administration is not as friendly to it. And so I do think that you're starting to see candidates, though, that show up, Vivek, RFK, et cetera, who are very pro-Bitcoin, pro-freedom technologies, et cetera. And regardless of maybe the 70-plus crowd that is running for president today, it's a generational thing. And so what you're going to get is you're going to get people under the age of 40 or 50, like they're growing up with this, right? And so it's kind of like when our generation, there's people running for president, if they don't support the technologies that we grew up on, we're going to be like, you're an idiot, right? And so it's okay for the kind of the older generation because there's that generational gap. But I think just over the long run, old people die, young people replace them, young people grow up with these technologies. It's going to be kind of the standard.
I would agree with that to some extent, even though I see some of our younger lawmakers right now not necessarily aligned with the technology advancements, but we haven't seen a true, I think, technological capable, other than Richie Torres. Richie Torres is a good example of a technological millennial. He understands the future. I guess in that particular case, he is a good example of lawmakers that do kind of get it. Now, you look at some of the scenarios that could play out here. Here's Ryan Selkis from Masari. I'm going to read this. I don't necessarily agree with all of it, but I am a little concerned about what he's talking about. If Biden gets in, stablecoins, this is what will get hit, basically. Stablecoins by requiring bank licenses for issuers, tokens being unregistered securities, all tokens, DeFi for unlicensed money laundering or money transmission, Bitcoin mining, layers on top of Bitcoin, so that gets hit, and then self-hosted wallets to collect unrealized capital gains. I don't necessarily agree that all of these kind of things this is a dystopian future. I look at it this way, maybe there is some regulatory alignment on the Democrats' side of things because they are very pro-bank, and at the end of the day, this is Wall Street that's going to be getting involved more and more in this because this is an asset class that's not moving away. It's clear that this is happening in other countries. It's clear that Asia and the EU have both moved on and have started to manage and start to go in a direction for regulatory alignment. I just think the US is behind right now. So we'll see how all this plays out. The other thing that was kind of interesting, this came from Austin Campbell. If Trump beats Biden because of the anti-crypto army fumbling the election away in swing states, they're going to really have to answer to some big questions. Because remember, the Dems are embracing big banks, the opposing tech progress, and then younger voter priorities. So there's a lot of problems that are posed against the political arena right now and the landscape itself. Crypto is definitely one of those, and it could be enough to possibly win a swing state or two with a crypto-friendly candidate, and that could even go into swinging over to Bobby Kennedy. So there's some things still yet that could play out in this. And all of this is going to, I think, be a bullish position for crypto as a whole. blockchain as a whole, technology, advancements here in the U.S. I think if we just get out of our own way, Drunken Miller said this the other day, I think we just have to do it. That's the key. All right, listen, if you guys are not part of the Diamond Circle, get in right now. Catch me out there on X, @Paul Barron. We'll catch you next time right here on TechPath.